Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Bullish outlook. Nvidia sees its sales growing through 2028, boosting stocks and futures as concerns ease. The AI spending is poised to lose momentum. Oil lower after a choppy session as progress on Hormuz shipping talks weighs against the risk of escalating attacks on Ukraine. And global central bankers head to Jackson Hole with war-driven supply shocks reshaping the policy debate and raising the stakes for interest rates and bond markets. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai with a start to a quick look at where equity benchmarks are sitting. U.S. futures 5/10 higher. This is Nvidia, right? Nvidia came after markets 70% revenue growth for fiscal year 2028. That is the expectation against what analysts had estimated at 45%. So quite a whopping increase in that estimate there. So the question here really is, why were people concerned about the AI rally? That is a question that we're going to be answering multiple times on the show today, or trying to answer multiple times on the show. And then, of course, we take a look at the yields on the 10-year treasuries. This morning, not doing much, about a basis point higher, 4.66%, still lower than the levels we saw it at last week. Another topic we were going to be speaking about in the show later today. And then Brent crude prices, fourth straight session of declines, 0.5% lower, $87 on the barrel. Now, we did report that Oman and Iran are considering a revenue-driven kind of mechanism in the Strait of Hormuz. More details on that, of course, as we discuss the geopolitics. And we continue to keep an eye on where Bitcoin is. And hear this out. This is what our markets team had put out. Investors are no longer choosing to buy either gold or Bitcoin as hedges against fiscal anxiety. They're now choosing to buy both. And actually, ETFs that are tracking Bitcoin and gold attracted a record $7 billion over the past 5 trading days. So you're seeing Bitcoin very close to $79,000 and gold roaming around that $4,600 an ounce level, which is elevated compared to what we had seen over the past couple of months or so. And now for Asian markets and some rate decisions there, we've got Winnie Su standing in Hong Kong for us as usual. Winnie, what do you have this morning?
Yeah, good morning, Abir. Well, we are seeing Asian stocks rising for a third day. Also similar moves in U.S. futures. You just mentioned on those bullish outlook, sales outlook from Nvidia. Now, that is really lifting textures in Asia, but specifically we are seeing Korea outperforming. And the nuance there is really coming through from the strength in the memory chip makers, the likes of Samsung Electronics and SK Hynix. We learned from the earnings that the surging memory costs continue to pressure the margins for Nvidia, and that is why you're seeing these names continue to be the biggest beneficiaries in our region, while the other names, specifically the upstream names in the AI supply chain, the likes of the Japanese chip makers, continue to underperform a bit when it comes to the comparison with the Korean names. Now, flip the board, you just mentioned it's all about the rate decisions and the rate expectations in Asia. And first off, we have what we saw in South Korea, the back-to-back rate hikes from the central bank, and also raising growth forecasts for this year as well as next year substantially. So we did see the Korean won strengthening as well as bond yields rising as well right after the decision. But we did see a bit of those moves pairing after the governor of the Bank of Korea mentioned that this is most likely going to be a gradual move going forward. Similar move that we saw in the Japanese yen weakening a bit after the Bank of Japan's deputy Himino said that that he didn't really offer much of a hint in terms of the September rate hike to come. And on the flip side of things, we did see bond yields in Australia continue to rise for a third day. Still the expectation for a rate hike, especially following those hot CPI prints yesterday. Back to you, Abir.
Winnie, thank you, as always, of course, for those market updates. Now, let's focus in on Nvidia, whose shares are up in late trading. And this is after the chip maker delivered second quarter earnings that crushed expectations. In a post-earnings call, company CFO Colette Kress gave a bullish sales outlook, easing concerns that AI spending is poised to lose momentum.
in AI demand is driving a global infrastructure buildout, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028.
Let's now get more from Bloomberg senior strategist Neil Campling on those earnings. He joins us now from London. Neil, good morning. A treat to have you 2 days in a row. Let's talk about Nvidia. Let's talk about the earnings, the surprise there. Was there a surprise, really? And does this put fears of a bubble, an AI bubble, to rest?
Good morning. It's the setup basically that on the numbers the stock didn't do a great deal, and as you mentioned during the conference call, that's when the stock ripped higher because this kind of guidance, the 70% number for fiscal 28, we never get this kind of long-term guidance from the company. So that was definitely taken as a positive. And if we put that into context with the street at 45% growth for that fiscal year, it means there's an incremental $100 billion of revenue that they're talking about as potential upside to this. The second argument to this, and putting the AI bubble concerns to bed for the time being, is that they mentioned that the 70% growth is constrained by the supply constraints. When we look at memory chips, as we've mentioned before, when we look at the fact that equipment has to be deployed by their suppliers, they're basically suggesting that that 70% growth could be as much as 100% if they weren't supply constrained, which is for the world's biggest company, just phenomenal growth.
Yeah, and essentially what you're saying is they could do more if there weren't those supply concerns. So when we talk about other challenges, Neil, what is expected ahead for Nvidia? What could really derail this performance?
So I think the other thing that came from the call actually is part of the challenges and part of the risks that people have, of course, is this circular financing, which they addressed head on. And they actually said on the call that they would they see it at the start of a massive compute cycle. And Jensen Huang even said later on the call that if he'd had the chance, he'd invest in these companies even earlier because he thinks they'll go on to become the biggest companies in the world. So there's certainly going to be a lot of financing that's still required to build out the AI compute. There are still concerns on the inflationary pressures driven by the memory prices that we know. And they actually also said on the call that the memory is still going to be in tight supply throughout the next 2 calendar years. So there's still bottlenecks, there's still supply chains. So there are still going to be some concerns around the AI build-out. But it's also the fact that the AI build-out is necessary to drive what is a revolution in terms of the kinds of technology that we're talking about here.
Yeah, Neil, thank you as always for following that story for us. Of course, Bloomberg's Neil Campling, senior strategist covering the Nvidia earnings for us. Now a look at some of the other stories we're following this morning. Meta is planning to pay up to $18 billion to settle a wide-ranging social media addiction lawsuit. That is after multiple U.S. states alleged that the company deliberately designed Facebook and Instagram to encourage compulsive use among young users. The deal also requires the company to put new guardrails on its platforms, including restricting how much time young people can use them. And Bloomberg has learned that Russia is preparing to escalate attacks on Ukraine. This is after concluding that peace talks have reached a dead end. Sources close to the Kremlin say that could mean intensifying missile attacks on Kyiv and hitting infrastructure targets elsewhere. We're also told Moscow increasingly views Ukrainian strikes on Russian targets as attacks by NATO because alliance members supply Ukraine with weapons and intelligence. And oil eased in a choppy session as traders weighed those Ukraine headlines and progress on diplomatic efforts to resume shipping through the Strait of Hormuz. Iran's military says it has reached a revenue-sharing agreement with Oman on the waterway. And for more on the oil story, we're of course now joined by our oil reporter, Rongwei Neo from Hong Kong. Rongwei, good morning. Good to have you with us. We're now seeing some kind of escalation on a different front, but let's start with the Strait of Hormuz and that revenue-sharing mechanism between Oman and Iran. Has that already impacted what we're seeing in terms of movement in the waterway?
Rajeev, good morning to you as well. Well, we can see that in the price movements of oil today, the market has priced in the optimism that comes with this potential deal. Of course, oil prices have came off just slightly as a lot of people out there on the physical market await with bated breath to see what kind of details could emerge from this deal and how this could physically manifest in terms of getting more commercial traffic or transits through the Strait of Hormuz and bring oil flows out from the Middle East to pre-war levels. Of course, now it's still too early to say. Already this week, we've seen oil coming off slightly. That's because just last week, all eyes are on the US as they tout this economic D-Day on Iran. And when Besant's announcement at the start of the week fell short of details that the market was awaiting and expecting, oil prices naturally came down as the traders continue to wait and see and try to figure out what could happen with the situation in the Middle East. Well, let's not forget that in the weeks or rather the months that this conflict has broken out, a lot of these Middle Eastern producers have went with various ways and methods to try to continue shipping oil out from the region, whether it's through shuttle vessels working with different oil trading companies, and they have successfully brought out some volumes of these oil to Asian buyers, or using workarounds such as oil pipelines.
And Rongwei, we're now talking about the Middle East, this slight breakthrough between Oman and Iran, which traders are reacting to, but the situation is not resolved. But now we also have another escalation on the Russia-Ukraine front. How do you think traders, investors will be looking at that? And then what would the impact of such an escalation be on energy levels?
Well, so fundamentally for the two conflicts, I would say the point of contention is slightly different. So for Middle East conflict, a lot of this, all of this crude oil that's flowing out of region is affecting major buyers in Asia, which are heavily reliant on the crude oil coming out from there. And of course, the Russian-Ukraine issue affects more of refined oil products, which is something that the Western Europe, or rather the entire Europe region, is more reliant on the region for in terms of this oil product breakdown. Now, of course, it is essentially a double whammy. Now that we are still seeing that the Middle Eastern conflict is unresolved and that has resulted in some tightness in the market when it comes to crude oil supply, and coupled with the fact that a potential escalation in fuel supply driven by the Russian-Ukraine war has further stoked sentiments, which is why even though we are just looking at oil prices, crude prices, the oil benchmarks, ICE Brent, as well as of course, WTI, they may not necessarily show the true picture of the fallout from these two conflicts ongoing at the same time. If we zoom in on the different products, such as diesel prices or diesel cracks, of course, that shows a drastically different picture, where there is a lot more impotent tightness faced by those segments of the market.
Rongwei, thank you as always for those updates. Of course, Rongwei Nia covering the old story for us. Brent crude now trading at $87.4 on the barrel, of course. Now, at least 100 people have been killed and hundreds more are missing after a violent flash flood on the China-Nepal border. The flood tore through a checkpoint and surrounding villages around 8:30 on Wednesday morning local time. Those missing reportedly include Nepalis as well as Indian, Malaysian, Australian, and U.S. citizens. Initial analysis suggests the flooding was triggered by a landslide. Tibet was also affected, and Chinese President Xi Jinping has called for an all-out rescue effort. Now, still ahead, Morgan Stanley previews this week's Jackson Hole Economic Symposium and tells us why they expect only silence on the near-term outlook for monetary policy. More details ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Central bankers are gathering in Jackson Hole this week and are set to discuss global inflation risks and the prospect of higher borrowing costs. Our international economics and policy correspondent Michael McKee previews Fed Chairman Kevin Warsh's first address at the symposium later on Friday.
The question hanging over this year's symposium is, will he or won't he? Will new Fed Chairman Kevin Warsh explain how he thinks about inflation and how he plans to get it back down to the central bank's 2% target? Warsh, who has criticized Fed officials for speaking too much, has been unusually circumspect since taking office. That's led to criticism on Wall Street, with investors demanding some further, if not forward, guidance in his Jackson Hole speech. At the Fed's last meeting on July 29th, he suggested he might only offer a high-level view of the reforms he wants to bring to the Fed. Market rates have risen since then, a sign of investor impatience. Complicating matters, rates have fallen in recent days after Treasury Secretary Scott Bessent said he's trying to manipulate the yield curve. Warsh has said he wants market rates to give the Fed direction on the economy. Bessent's move would make those rates harder to read. All new Fed leaders have a learning curve. This year's Jackson Hole will prove a test for Warsh, how well he can thread the needle between his views and the markets. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
For more on the upcoming Jackson Hole Economic Symposium, let's bring in Morgan Stanley Senior Global Economist Rajeev Sibal. Rajeev, good to have you with us. Welcome back. You heard Mike. Will he or won't he? Kevin Warsh, what does he do tomorrow?
Yeah, I think the market indeed is very much looking for a framework or a thought process on how to anchor Chair Warsh's inflation framework. Our baseline expectation is that we do not get that. We don't think that he's going to change tack and start communicating more clearly to the market. We don't know that the market pressure is necessarily there, and as mentioned before, the data has been going in their direction, or at least in an easing direction, which helps relieve some of the pressure in the market. So we will see. I mean, I think market participants are clearly hoping for a little bit more of a guidance and framework, but that's not our baseline expectation right now.
Okay, not going to happen then. Rajeev, you have seen what was happening with yields on the long end of the curve. The 10-year notes, the 30-year notes, we've stabilized since those highs that we saw over the past 10 days or so. But do you think that the bond market is doing the Fed's tightening for it right now?
So, this is one of the big debates in the market, is if leaving an uncertainty in the market, adding perhaps some term premium across the curve, allows the market to do some of the Fed's work for them. Ultimately, our call has been for a long time that tariff disinflation is in the path. And so for us, the data is doing most of the work and allowing the Fed to have a clear path forward. But clearly, the market tightness and the uncertainty creates some financial tightness that will exaggerate or help some of that tariff disinflation, some of the broader disinflation that we've been seeing. So for us, it does help, but it's going to continue to be volatile, and so that's why we're continuing to anchor into the data.
Okay, and what about the interventions or the prospect of further interventions? Do you think that those kind of undermine the very signals that the Fed needs when it comes to Scott Bessent kind of coming in with those buybacks?
Indeed. Ultimately, those buybacks are relatively small. They're pretty standard market practice. So for us, it was not kind of a big market-changing event in terms of intervention from the Treasury. There are tools that the Treasury can use if they wanted to intervene, and ultimately what we're looking for is perhaps a little bit change of the tenor in which they issue, and we'll be focused on that when we come forward at the next issuance calendar. But ultimately, where Scott Bessent was looking at and kind of the levels at which he intervened on the 30-year are perhaps not the clear signal for the Federal Reserve. I think the Fed needs to be a little bit more focused, or is usually more focused on the front end.
Okay.
And so we do see some differentiation between the Treasury and the Fed and what's been going on.
So money markets are fully pricing in a hike by December at this point. Is that your base case?
That is not our base case. Last time I was here, I think the market was pricing in a hike for September. And we have been consistent that we think tariff disinflation allows the broader inflation indices to move lower, and so that removes the need for hikes. We continue to have that view into year end. We understand the optionality the market has put in for a hike in December, and this is to the discussion we're having before, why we need some framework framework and guidance in terms of expectations of what the neutral rate is and how tight actual policy is right now. But again, we are anchored in the data, and to us, the data is going in the right direction, so we don't think the Fed needs to hike this year.
Okay, and I'm going to cheat a little here because we've been talking about monetary policy and the Fed and Jackson Hole. I want to talk about Nvidia just a little bit, not necessarily the earnings, but just what the story tells us about what is next, what's the next leg for the AI rally. Is it set to continue? Is it set to suffer a little bit?
No, this is the million-dollar question that I've been discussing with clients all week, this week, last week. Ultimately, what we're looking for is what the AI capex level is going to look like. One of the things that we've been highlighting in our research is that a lot of AI capex has been devoted to imports so far. So actually, if you look at contributions to GDP from AI capex, a high percentage of that is just imports. Okay. And what we're looking for now is that transition away from imports towards build-out. It's not to say that imports will stop, but we want to see more of the build-out. And I think that's the next leg here. And I think you saw a little bit of that discussion in the Nvidia earnings as well. And so let's see if we continue to get that into the third quarter, fourth quarter of the year.
Yeah, and that's going to be everything we're going to be talking about for the rest of the day. Rajeev, thank you, as always, for your time. Of course, Rajeev, Sibal, Senior Global Economist at Morgan Stanley. Now, still ahead, we give you a sneak peek into our exclusive interview with the daughters of Africa's richest man, Fatima, Halima, and Maria Dangote. They tell us about the company's IPO bid, plus their succession plan. That is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Shein is set to be targeting an IPO price of about 48 Hong Kong dollars and 56 cents per share, just above the midpoint of its marketed range. The offering follows failed attempts to go public in the U.S. in 2023 and London in 2024. And shares of Salesforce jumped in extended trading as the software company forecasts strong revenue expansion. It sees sales reaching $11.5 billion in the fiscal third quarter, beating estimates. Salesforce also announced an expanded partnership with Anthropic as it integrates its products into AI model Claude. ZAI says it is behind an AI model that swept to the top of the online usage charts following a surprise launch over the weekend and outpacing DeepSeek in usage. The company says the model, now called GLM 5.3 Flash, runs on Chinese AI chips. It's one of a series of recent Chinese models showing benchmark-topping performance at a much lower cost than U.S. rivals. Now, coming up, Nvidia crushes expectations in its latest earning. But what is next for the company and at the heart of the AI build-out? We'll discuss that with Lopez Research founder next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Bullish outlook. Nvidia sees its sales growing through 2028, boosting stocks and futures as concerns ease. The AI spending is poised to lose momentum. Oil lower after a choppy session. This is as progress on Hormuz shipping talks weighs against the risk of escalating attacks on Ukraine. And global central bankers head to Jackson Hole with war-driven supply shocks, reshaping the policy debate and raising the stakes for interest rates and bond markets. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's start the second half of the show with another quick look at where risk assets are sitting. S&P futures moderating slightly, but again in the green this morning. This is an Nvidia story. We'll talk more about Nvidia, of course, because it is or was the big story of yesterday. And then we keep an eye, of course, on the 10-year yields. The 10-year yields are not doing much this morning. They were at quite elevated levels over the past 10 days. We also keep an eye on the 30-year yields that were at more elevated levels. But all eyes turn to Jackson Hole happening tomorrow. We had Nvidia and Jackson Hole happening this week, and we're done with one. One is coming up next. We'll have to see what Kevin Warsh, what the guidance looks like, or what the lack of guidance guidance looks like. And then, of course, Brent crude prices, the regional story, 4/10 lower this morning, $87.5 on the barrel. We have discussed that mechanism between Iran and Oman to generate profits out of shipping movement through the Strait of Hormuz. And then, of course, Bitcoin, the talk of the past week or so, 78.7, around $79,000. Some of our coverage includes the fact that we might see some more upswing there. Investors are no longer having to choose between Bitcoin and gold as hedges against fiscal anxiety. They're now buying both. ETFs actually tracking Bitcoin and gold attracted a record $7 billion over the past 5 trading days, and that's why you're also seeing gold prices at around $4,600 an ounce up this morning. They were moderating yesterday, but this morning we're seeing them about 0.6% higher. So 2 assets that are going to be the talk of the town over the next period. And now for a look at what Asian markets have been doing, we have Winnie Su standing in Hong Kong for us again. Winnie, what do you have for us?
Yeah, good morning, Abir. It's indeed a very busy morning for Asian markets. Of course, we have Asian stocks following those moves in U.S. futures as well, as we have these very bullish sales outlook from Nvidia, so supporting sentiment on that front. But also lots going on in the cross-asset picture. We have South Korea's central bank having this very rare back-to-back rate hike, and also with the central bank raising growth forecast for this year as well as next year substantially. And that is helping the Korean won strengthening against the U.S. dollar. We did see a bit of a pairing after the Bank of Korea governor mentioning how this is most likely going to be a gradual move. And similarly, we are seeing a bit of a weakening trend in the Japanese yen as well. We had Bank of Japan's deputy governor there saying that they have the doors open for a September hike to come. However, didn't provide much of a hint in terms of how hawkish this might actually be. Now, on the other side of things, you have Australian bond yields continue to rise for a third session as expectation for the RBA to hike continue to extend after the hot CPI print yesterday. Now, back to that Nvidia story, we take a closer look at what's going on in tech stocks, because obviously it is lifting the overall sentiment, but some nuances that we can see. If you flip the board and take a look at who are the real gainers here, they are the memory stocks, whether it's Samsung Electronics, SK Hynix, or even China's CXMT here jumping more than 5%. And that is coming from how Nvidia's earnings point out that memory chips continue to be that big bottleneck, and that the surging memory prices are in fact pressuring the company's profit margin. And that is why you are seeing the biggest beneficiary being in these names, while the names that are more in the upstream of the AI supply chain, the likes of Japanese names like Advantest, are actually losing favor compared to some of these memory chip names. Back to you, Abir.
Winnie, thank you as always. The Kospi wins again, it looks like. Now let's turn back to Nvidia. The company CFO Colette Chris gave a bullish sales outlook for 2028 with the expectation of approximately 70% revenue growth in fiscal 2028. The statement has eased concerns on AI spending, but what constraints still stand in the way for the chip maker? We will discuss now with Maribel, Lopez founder and enterprise AI lead at Lopez Research. Maribel, good to have you with us this morning after those earnings that we saw yesterday, some whopping numbers yet again. So when it comes to Nvidia, if they continue to have these big numbers, what do investors really have to worry about?
I think when you look at the portfolio, it depends on, are you looking at the memory stocks, the chip stocks, the hyperscalers, or are you looking at the software as a service market? And depending on which of those markets you're looking at, the answer is slightly different. But right now, it seems that AI is rising tide for all boats in all sectors of tech for the most part. We saw tremendous hyperscaler growth in the last quarter. We saw chip growth in this quarter. We've even seen really good AI SaaS growth with Salesforce and ServiceNow, each reporting over a billion or more in AI-related revenue. So I think what investors need to worry about is not trying to get overly enthusiastic to expect that we can have the same rate of overperformance that we've seen in the past 2 years.
So that actually leads me to my next question, which is, do you think that when it comes to the AI race, the AI rally, do you think that it's Nvidia pulling the market along, or do you think that there is a real tangible story here?
I think when we look at Nvidia, the story around Nvidia has actually been really consistent for the past 2 years or so. And I'm not sure anybody had been listening. And that's that we will sell everything that we can make, and we are still supply constrained. And I think that they actually were very clear about what that meant when they moved into this next set of guidance, that they'll be able to sell everything. Where I think investors start to get a little ahead of themselves is thinking, hey, well, if they can sell everything, is there a potential that they could sell more? And this is where we get back to things like, do we have the parts available to sell more? When I think about what's going on in enterprise AI, we really still are at early days, and you're just starting to see this filter out of just hyperscaler buys and into actual real companies wanting to purchase AI. And I think that's what everybody's been waiting for.
And Maribel, CapEx hasn't left the room. It hasn't left the equation. That those concerns about spending are still very much there. So when do you think that spending, or AI spending, gets too much for the economy to absorb? Are we edging closer to that point?
This is one of those million-dollar questions or billion-dollar questions. We've been looking at this for at least more than a year now, predicting that there would be some slowdown to this. And every quarter, we see more and more CapEx being spent. I think the reality of where we are is we're in the biggest infrastructure upgrade we've had since the internet, and we just don't know when that's going to end yet. But all signs are that it's going to be positive for at least the next year. So I think that is, what we need to do is temper enthusiasm that it could possibly be 200-300% growth for Nvidia instead of 70% growth for Nvidia, because the numbers that we're looking at right now, billions and billions, tens of billions of dollars, it's hard to have the same level of outperformance moving forward. But there definitely is an issue of when will the model companies just be spending too much money in CapEx? And I think for some model companies, you're already seeing that. We've already seen quite a hit with Meta, because unlike the hyperscalers, they're not really selling AI models to enterprises. They're not really selling infrastructure services like the hyperscalers are. So they're struggling a little bit more with their footing on how to make the most out of AI.
Maribel, I just want to talk about the layers of the AI trade. It seems to shift every now and then. It was semiconductors. I mean, it still is within semiconductors. But do you think that we're going to see a shift soon from chips to everything needed to build chips, given the statement that we had from Nvidia about those supply constraints?
If we're looking at infrastructure, I think we've seen a lot of build in infrastructure. I think we're still at a state where it's hard to get all the parts aligned and to accelerate that so that we can get that into the market faster, which I think is what everybody's looking for. Can we do this faster? Where I think we see a lot of potential opportunity that we didn't see before is, could we actually see enterprise buying AI from software companies? Because they actually have fairly good margins around selling AI in the software landscape. So the question is, who's going to have the better margins in the long run? We see a lot of CapEx coming out of the model companies and not necessarily as much in revenue. We do have Anthropic at about, close to 12 billion. We have OpenAI at about 7 or 8 billion. But you already have somebody like Salesforce saying they have $1.5 billion in software revenue, and they don't really even do the models. They leverage the models that are available. So it's an interesting opportunity to see if it's going to be hardware or if we're going to see more growth in the software landscape.
Maribel, always a pleasure to chat with you, but we're going to have to leave it there today. Maribel Lopez, founder and enterprise AI lead at Lopez Research. Now, coming up, Saudi Arabia's push to deepen its capital markets and attract more investors and trading firms. We discuss with Rascal Investment Bank's Senior Executive Officer Eric Swats next. This is Bloomberg. Welcome Welcome back to Horizons Middle East and Africa. Saudi Arabia is seeking to deepen its capital markets by making it cheaper and easier to trade derivatives. The change aims to attract more investors and trading firms by providing tools to hedge positions and to manage risk. So joining me now to discuss this is Eric Swats, Senior Executive Officer at Rascal Investment Bank. Eric, good to have you with us.
Good morning.
Thank you for coming in. Let's talk about why this is happening now. Why is Saudi Arabia deciding to do this now?
Well, I would say it's about, looking at fixing a market that, really hasn't been working. Futures have been available, but haven't been traded actively. So the Capital Markets Authority, the Tadawul, are looking at making certain reforms which should enhance the use of the derivative instruments in order to, mostly increase acceptability in the market, access, and to make the market itself a more institutional and internationally integrated market. Okay. It's very important because the Tadawul is the largest exchange in the Middle East Africa region. So what they're doing is important for activity here.
So do you think that the Saudi approach now is building a smarter market rather than a bigger market?
Well, these are reforms that are really quite technical in terms of their dimensions, right? We're talking about reducing fees, right? Fee waivers. We're talking about margin optimization, which again is quite technical because it has to do with making sure you have the right sort of set-offs, the right sort of charges for overnight positions. The other is that they're looking at making the derivatives just more accessible for international investors.
And so when it comes to the derivatives, how does that affect the way international investors look at the Saudi risk?
Well, when international investors are looking at, let's say, any country or Saudi in this example, there are a number of factors that they'll consider in terms of the development of that market. Having the right sort of plumbing, having the right sort of infrastructure in place, which is really about these reforms and the use of derivatives. It's infrastructure for the market as opposed to just a trading tool. So you're looking at ease of access into the markets. You're looking to have the right sort of tools for hedging and management. These type of considerations will allow the investors to access Saudi Arabia and potentially lift their ratings of the market, thus allowing for greater investments into the capital markets there.
Okay, let's talk about valuations a little bit because Saudi Arabia has been trading at a premium compared to regional peers. I started at Bloomberg actually covering equities, and I've been hearing that argument since then. And so how does that fare, especially when the earnings growth story does not catch up?
Yes, and that's an important consideration. And so it's not just an effort at, how should I say, increasing the infrastructure, improving the infrastructure, improving the plumbing. This in and of itself will not lead to better market performance. What we're looking at in terms of Saudi Arabia is enhanced earnings growth from the underlying companies. And there is also an expectation that the foreign ownership limits will be liberalized, thus allowing more investors to come into the market and participate.
And in terms of the regional play, Eric, do you think that this step puts Saudi Arabia a step ahead of some regional players, including capital markets in the country here?
In the UAE? These type of tools, this type of plumbing, this type of infrastructure does give the Saudi market kind of an improved position. Yeah, there's no question about that. But it's not the only factor that investors will consider when they are looking at investments in the region. Outside of the foreign ownership liberalization, we would favor investments in the UAE. Companies like Talim, the ADNOC enablers, ADNOC Gas, logistics, drilling, as investments at this point in time.
Okay, and Eric, just briefly, what could be the next game changer in Saudi Arabia?
Well, the next game changer really relates, in our opinion, to foreign ownership liberalization and how that impacts individual companies and when they go and decide to lift the caps that they have with respect to foreign ownership.
Okay, but some positive signals that we're still seeing out of Saudi Arabia. Eric, thank you.
They're very positive and moving in the right direction.
Yeah.
And this is what we expect to see over time.
All right, Eric, thank you so much for being here with us today. Of course, Eric Swats, Senior Executive Officer at Rascal Investment Bank. Now, coming up, how the daughters of Africa's richest man are preparing to carry forward their father's industrial legacy. We will have a sneak peek of our exclusive interview with them next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Anthropic is set to have agreed to spend $45 billion to rent AI computing capacity from Nscale's flagship data center project in West Virginia. Sources say the 6-year deal will use Nvidia's next-generation Vera Rubin chips and represents about 460 megawatts of power. Minimax says first-half revenue nearly quadrupled as the Chinese AI developer continues to gain customers despite intense competition at home. Annual recurring revenue reached $800 million in August, and the company says it plans to speed up the rollout of new models. Investors remain cautious, however, with the stock well below its post-listing peak. CNOOC has reported higher first-half profits. This is as the Iran war triggered a surge in global energy prices. China's biggest offshore oil and gas driller saw net income of almost $13 billion, which was higher than last year's nearly $10 billion profit. CNOOC is the most directly exposed to crude prices of China's state-owned oil giants since it lacks significant downstream operations. And the proposed listing of the Dangote refinery could be a defining moment for African capital markets and a major test for one of the continent's most influential business families. In the upcoming episode of Next Africa, Bloomberg speaks to the Dangote sisters as they prepare to carry forward their father's industrial legacy. So let's get more from Bloomberg's Chief Africa correspondent, Jennifer Zapasaja. Jen, good morning. What else stood out to you from that conversation?
Well, Abir, good morning to you. Yes, so listen, this Africa, what we're anticipating really with this IPO is it's expected to be Africa's biggest IPO ever. And so for these daughters and really what we were seeing as the next generation of the Dangote group, it's really about continuing on the legacy that their father has built. They still made it a point throughout the conversation to tell us that their father is still very much at the helm of the organization and the businesses that he started years ago. They've actually stepped in and are working in their capacities in their various roles now for just over a year, but earlier this year it was officially announced. And so they see this as a moment for them to continue on and to really step into the public eye as we await this seminal moment potentially for Nigeria's capital market and also African markets more broadly. Maybe we can take a listen to what they said, and I'll talk to you in a minute.
By next year, first quarter of next year, you start to see the presence of family office while looking at the 2030 vision, looking at how we support women, how we support social impact investment, not just the business-wise. We will invest, we will collaborate, we will grow our refineries from, we have in Nigeria, we're going into Kenya, we're doubling our capacity from 650, actually my dad will correct me, 750 barrels per day to double that. So we are well on our way to do that.
Would you look to partner with others in terms of co-investing in any projects or collaborating?
We don't mind co-investing, but we are very much open to partnering when it comes to investment. But when it comes to our legacy, it's going to be our legacy.
Is that because it stays within the family?
It stays within the family, yes. It stays within the family, and it stays within our core values. What really matters to us is our core values. We know what they are. We are also Muslims. We're also Sharia compliant, so it's a bit different, different feel. And we want our businesses in 5 years to still look like we're focusing on that industrialization, but having it to survive the next 8-10 generations. In Africa, from the 3rd generation, you're like, what happened, right? So we don't want to know we don't want to be part of what happened. We know what happened and we're going to change it.
So, Abir, that was Halima, the middle daughter, speaking there. But I think I want to stress really that these daughters, it's not been smooth sailing. They're still very much proving themselves internally, externally, and most importantly, probably still to their father. So you'll see more of that in our conversation this month on Next Africa with the daughters of Dangote.
Jen, we look forward to that conversation. And of course, don't miss this month's episode of Next Africa that is premiering tonight on Bloomberg Television. And you can also stream it on Bloomberg.com and on YouTube, or catch replays over the weekend. But for now, that is it for Horizons Middle East and Africa. Stick around with us for Daybreak Europe next. This is Bloomberg.